I'm Brett Viome. I'm a board member of the Market Technicians Association, and I'm here with Bill Strazzullo, CMT CFA. And Bill is a lecturer here. In fact, I just listened to his presentation. It was excellent, and I'm happy that he's joining us for this interview today. Bill, would you mind giving us a little bit of a brief background history on you and also some of the firms you worked at and your development in your career?
Sure. I started off undergrad Brown, majored in economics, political science, organizational behavior. Went from there to Harvard Business School. And from Harvard, I went right to Wall Street. In fact, my first job was about 5 minutes from here, 1 New York Plaza, as an intern at Salomon Brothers.
Oh, yeah?
Then I moved right up the street a little bit, JP Morgan. I started in the business in fixed income as a market maker. From there, I went to being a proprietary trader, futures and options, fixed income, currencies, then eventually got into equities and commodities. Moved back to my hometown of Boston, was chief trading strategist at State Street for about 6 years. And then for the last 10 years, I've been a partner and chief market strategist at Bell Curve Trading, which is my firm, along with my two great partners, George Flynn and Joe Mussolino.
Okay, so if you were in trading at Salomon Brothers and JP Morgan, doesn't that conflict with your fundamental background, Harvard background, and learning about fundamentals and from the academic perspective?
Yeah, good question, Brett. There's a wide chasm between what you get taught in school and what actually works in the marketplace. My background originally was totally fundamental because economics degree in Brown, Harvard MBA, JP Morgan's training program was completely fundamental. And then my first real job in the business was on a trading desk at JP Morgan, where I'm asked to make bid offers all day long and also to do some proprietary trading. And that fundamental time frame or time horizon is just far too blunt. So I went from being somebody who was totally fundamental and then kind of swung over to the dark side and became totally technical, looked at things like MACD, RSI, stochastics, time price, parabolic system, ADX, DMI. And that's all really good stuff, and a lot of it's been discussed here, but I wanted to go the next step and do something that was different, and that's kind of what got me to Bell Curve.
Okay, and now the idea of Bell Curve is about balanced markets. Explain what that concept means.
Bell Curve, first of all, was started by my partner and President Joe Mussolino, really sharp guy, market guy. My other partner, George Flynn, both of those guys been at it for 20 some odd years. I've been a partner and chief market strategist for 10. But the thing that really attracted me to Bell Curve was that it was much more concrete. Everything's based on math and statistics. It's no kind of gut feel or anything like that. And one of the main concepts is that the market trades in a series of normal distributions of bell-shaped curves, which was really unique to me when Joe introduced me to that concept in the mid-90s. And I found that to be a far better, far more effective paradigm than anything that I had been exposed to that point.
So fair value is something that you really pound the table on as something that's statistical and proven, and you can identify it.
Yeah.
Why?
Yeah, because when you're trying to evaluate a market, you're trying to trade a market to make money, you think about it, you want to buy cheap and sell rich. You can't do that unless you know where fair value is. And most people in this business think about fair value as some sort of subjective or ephemeral concept. Like you have your version of fair value for Apple and I have my version, or gold, or whatever the market is. No, there's one factual fair value, which is just where the bulk of trade activity is taking place in that time frame. So one of the concepts we get across to customers is, where is that fair value? Because once you know that, then it makes it the buy decision and the sell decision much easier.
See, that's very different from what you hear market pundits say on television. So you've been on television quite a bit.
Sure.
I'm sure your experiences have been very refreshing. You probably, because you have so much confidence in what you're talking about. Tell us about that.
Yeah, I mean, I've probably done over 200 television interviews at this point, US and Canada. Just did one a week or so ago. And look, when you're in business for yourself, and a lot of the people at the Symposium are working for other firms, but once you hang that shingle out there, and now it's myself, Joe, and George, and we've got also Tim Hayes who runs sales. I mean, you've got to not only be right about the markets, but you've got to be able to sell in market. And a big part of that in this business is being in the media, social media, television, print media, et cetera. And so I look at that as a necessary part of the job to be able to market the work that we do, which I think, in my humble opinion, is the best stuff out there. So
Good. Okay, so if I were to bring you on television today, what would be one of your best market calls?
I think one of the most, I think one of the most interesting things that's going on right now, and I've talked about it on TV a bunch over the last month or two, is what's going on in biotech. Biotech, and I'll use the IBB, hit major support around the 240, 245 level. And we have our clients long, intermediate, and long term. We backed off on it, or I backed off a little bit short term because the market just kind of got stuck in the mud. I think what's happened, especially over the last couple of days, is you've seen this big push in biotech. So I look at something like the IBB and say, hey, it bottomed out at 240, 250, and even where it is now, which is around 280, I think you could potentially see that 2-3 years down the road, 500 or 600. Wow. So there's not that many kind of big plays out there, and I think that's one that has potential.
Okay, sounds good. Thank you, Bill.
My
Appreciate
pleasure.
it.